Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
All right, welcome back to the deep dive. It's Tuesday, January 20th, 2026, and I want to start today with a really strange picture. If you imagine a split screen, on the left side, you've got the price of Bitcoin. It's red. It looks ugly, like everyone is packing up and going home.
It looks really ugly, yeah.
But then you look at the right side of the screen, the actual infrastructure, the corporate moves, what countries are doing.
And that side is booming.
Yeah.
It's the definition of cognitive dissonance. If you only look at the price ticker today, you are missing the actual story.
I'm calling it the Great Divergence. We have a stack of sources today that I think paints this picture perfectly. We're seeing Bitcoin down, but the total market cap up. We're seeing, retail investors maybe getting scared while corporations are literally buying land with crypto.
It's a fascinating moment. You have this surface level volatility, which is what grabs all the headlines. But underneath all of that, the plumbing of the global financial system is, well, it's being ripped out and replaced.
So let's unpack this, starting with the numbers that are making everyone scratch their heads this morning. Bitcoin is trading at $92,977. That's down about 2.5%.
Right.
And usually when Bitcoin sneezes, the whole market catches a cold. But today, the global crypto market cap is actually up nearly 3%. It's sitting at $3.23 trillion. It shouldn't happen, right?
In a simple world, no. But markets aren't simple anymore. What we're really seeing is a rotation. Bitcoin is consolidating, it's taking a breather after that big run up. But the capital isn't leaving the ecosystem, it's just moving.
Moving where?
Moving down the risk curve, or maybe just laterally. I mean, you see Ethereum's up nearly 4%, trading over $3,200.
But the number that really jumped out at me in the data wasn't just ETH, it was the stablecoins. I was looking at the volume charts, and Tether just crossed, 100 billion in volume?
Yeah.
And when prices drop and stablecoin volumes spikes like that, that tells me something pretty specific is happening.
It tells you that traders are scared, but they aren't leaving the casino.
Okay.
They're just cashing in their volatile chips for stable ones, USDT or USDC, and, sitting at the bar waiting for the next hand. It's a flight to safety, but it's happening inside the crypto economy.
Right. So back in, say, 2018 or 2022, a drop like this meant people sold for US dollars and wired the money out.
Exactly. They fled the building. Today, they just swap into stable coins and wait.
Which explains why the fear and greed index dropped to 45. So neutral, but the total value locked in DeFi is still massive. It's $127 billion just sitting there.
That TVL number is crucial. That is, let's call it the sticky money. Those are assets, mostly proof-of-stake tokens that are locked up in smart contracts to earn yield.
You're not just going to sell those on a whim.
No, you don't unstake and sell those because Bitcoin had a 2% dip.
Yeah.
That's long-term conviction versus short-term speculation.
Speaking of long-term conviction, we have to talk about the physical layer of this industry. Because while traders are flipping stablecoins, Riot Platforms just made a move that feels like a shift in the tectonic plates of the mining industry.
This is one of the biggest stories of the month, for sure.
So Riot acquired a 200-acre site in Rockdale, Texas. But here's the kicker. They paid the $96 million price tag in Bitcoin.
Just sent it. Peer-to-peer to close a massive real estate deal.
But reading through the press release, they aren't just building another Bitcoin mine, are they?
No, and this is where it gets really interesting. They're pivoting. Or at least they're diversifying. They're moving into high-performance computing, into AI. They've already signed a huge lease deal with AMD.
I have to play devil's advocate here, though. I've read a lot about this and the difference between mining Bitcoin and running an AI data center.
Yeah.
It's not the same thing.
Not at all.
Bitcoin mining is interruptible, right? The grid gets hot, Cook calls and says, shut down, you shut down. No big deal. But you can't just shut down a data center that's training a massive AI model. You'd lose millions in progress. So can a miner really make that transition?
You hit the nail on the head. That is the billion-dollar question. It's an incredibly difficult pivot. AI needs, like, Tier 3 or Tier 4 data center standards.
Yeah.
Redundant power, massive cooling, 99.99% uptime.
And mining is?
Mining is happy with Tier 1 or 2. It's gritty, it's hot, it's fine if it goes down for a few hours.
So why do it? Why take on that huge risk?
It's the economics of the halving.
Yeah.
Since 2024, mining margins have been razor-thin. It is a brutal business.
But AI?
But AI is a gold rush. Riot is looking at their assets and saying, look, we have the land, we have the massive power connection, which is the hardest thing to get in 2026.
Right.
So let's just upgrade the infrastructure.
So it's a survival strategy?
It starts as survival, and then it evolves into a growth strategy. If they pull this off, they're not just a Bitcoin miner anymore. They become a compute infrastructure company.
And paying for the land in Bitcoin just validates the very asset they're mining.
It's a perfect loop.
So that's the hardware layer, the physical locations in Texas. Now let's move to the financial layer. Because if Riot is trying to modernize the grid, the New York Stock Exchange seems to be trying to modernize, well, itself.
This is the kind of institutional validation we've all been waiting for. The NYSE, owned by IC, is launching a platform for tokenized securities.
I feel like we've been hearing tokenization is coming for, 5 years now? But when the NYSE says it, it just hits different.
It hits different because of the liquidity and the trust. This isn't some startup trying to disrupt the market. This is the market disrupting itself to stay relevant.
You know, the idea that the stock market closes at 4 p.m. has always seemed completely ridiculous to me. It's 2026.
The internet doesn't close.
Right. Why do I have to wait until Monday morning to sell a stock if some huge news breaks on a Saturday?
It's an archaic holdover from the days of, paper tickets and traders yelling at each other on a floor. But the implications of changing it are huge. If you get instant settlement...
Meaning the trade is final the second you click the button?
Exactly. You remove billions of dollars of counterparty risk from the system. You don't need the same clearinghouses holding collateral for 2 days.
It makes capital more efficient.
Drastically more efficient. And it allows for fractionalization. You want to buy $5 worth of Berkshire Hathaway stock. On a tokenized rail, that's easy. On the old legacy rails, it's a massive headache.
So we have the physical layer with Riot, the financial layer with the NYSE. Now, I want to zoom out to the sovereign layer, because while companies are making these moves, we have actual nations putting their flags in the ground. And the announcement from Bermuda at the World Economic Forum really caught me off guard.
Bermuda is fascinating. They're essentially betting the house on this.
They announced they want to be the first fully on-chain national economy. And looking at the details, this isn't just some PR stunt. They're partnering with Coinbase, and specifically with Circle, with USDC.
That partnership is the key. You're not going to run a national economy on a volatile asset like Bitcoin. You need stability. By integrating USDC for taxes and for government services, they're effectively dollarizing their economy, but just on a digital rail.
See, that's the part that interests me. It's not about crypto is cool. It's about administrative efficiency. If I pay my taxes in USDC, the government gets it instantly. There's no check clearing, no bank float.
And think about the transparency. I mean, if the government's budget is on-chain, in theory, citizens could audit government spending in real time. Now, whether they'll actually go that far is another question, but the capability's there.
It's funny, though, announcing this at Davos. The WEF crowd is usually pretty skeptical of crypto, yet here's Bermuda saying, no, we're doing this.
It's a calculated risk. They're inviting scrutiny. You know, the World Bank and the IMF get very nervous when countries start building their own independent financial rails. But Bermuda is small enough and agile enough that they can be the sandbox for the world. If it works there, it sets a major precedent.
But they're not the only ones in this race. We need to talk about the Middle East. The sources highlighted two major stories, one from the UAE and one from Saudi Arabia, and frankly, the level of sophistication there seems miles ahead of what we're seeing in the West right now.
The Middle East has a massive advantage right now, and it's clarity. While the US SEC and the CFTC are still fighting these turf wars, regulators in the UAE and Saudi Arabia have just said, here are the rules, come build.
Okay, let's look at the UAE first. Emirates NBD. They issued a digital bond, a 1 billion dirham bond. This wasn't a test pilot with $10,000. This was a $1 billion issuance.
And crucially, it was listed on NASDAQ Dubai, and it used Euroclear's distributed ledger technology. This is the actual plumbing of the global bond market moving on-chain.
Why does a bank even care about issuing a bond digitally? Is it just to say they did it? Is it a marketing thing?
Cost and speed. Issuing a bond the traditional way involves a mountain of paperwork, lawyers, custodians, fees. It's slow and it's expensive. Doing it digitally just cuts out so many of the middlemen. It makes the bond easier to trade, easier to manage through its life cycle. It's pure efficiency.
And then you have Saudi Arabia, this Sustain platform they announced. The notes described it as an AI-enabled matchmaking platform for sustainability projects. I think I jokingly wrote in the margin that it sounds like Tinder for green bonds.
That is actually a surprisingly accurate analogy.
Really?
But think about the problem they're solving. The market for sustainable projects is incredibly fragmented. You have investors with billions who have these ESG mandates. They had to deploy capital into green projects.
Right.
And then you have the projects themselves, solar farms, water purification plants that need the money, but they can't find each other.
The due diligence costs are too high, or maybe the projects are just too small for a big bank to even look at.
Precisely. So Saudi Arabia is using AI to scrape the data, to verify the projects, and match them with the right capital. And they're doing this as a core part of their Vision 2030 plan. They're trying to diversify an oil-based economy, and they're using AI and blockchain as the tools to actually do it.
It really highlights the difference in mindset. I mean, in the U.S., we're debating if AI is going to take our jobs. In Saudi Arabia, they're building state-level platforms to use it for economic restructuring.
It's the difference between playing defense and playing offense. Okay. The EMEA region is playing offense.
Okay, I want to bring all of this back down to the listener's portfolio, because we've talked about miners, stock exchanges, entire countries. But the most confusing piece of data we have today is about the smart money. We touched on this divergence earlier, but I want to drill into the ETF flows versus the treasury flows.
This is the single most important signal for an investor to understand today.
So the numbers. We have ETF outflows of about $390 million. People are selling their Bitcoin ETFs. But at the same time, we have digital asset treasury inflows of $2.38 billion. That is a massive gap. So who is selling and whose is buying?
The who is the key. The ETF outflows. That's largely retail investors. Or maybe some short-term hedge funds. We call them the paper hands. They see the price dip, they get nervous, and they sell the ETF to stop the pain.
Okay, so that explains the 390 million leaving. But who's putting in the 2.38 billion?
That is the diamond hands. That's corporate treasuries, CFOs, institutions that are putting these assets on their balance sheet for 5, maybe 10 years. But there's a nuance here that most people miss. They weren't just buying Bitcoin. The data shows a really heavy tilt toward proof-of-stake assets for these treasury inflows.
And this is what I wanted to clarify. Why would a conservative CFO prefer a proof-of-stake asset over Bitcoin? I mean, Bitcoin is digital gold, right?
Put yourself in that CFO's chair for a second. You're sitting on $100 million of cash. If you buy Bitcoin, it just sits there. You hope it goes up in value, but it doesn't produce anything. It's a digital rock. Okay? If you buy Ethereum or another proof-of-stake asset, you can stake it. You become a validator. You earn a 3 or 4% yield on that asset, denominated in that asset.
Ah, so it's like a dividend.
It's exactly like a dividend.
Right.
It is cash flow. And corporations love cash flow. It offsets the risk. Even if the price of the asset stays flat for a year, they still made 4% on their stack.
That makes perfect sense. The retail trader is looking at the chart and panicking. The institutional player is looking at the yield and compounding.
And that explains the divergence we're seeing between the Bitcoin price action and these huge treasury inflows. The smart money is hunting for yield, not just price appreciation.
It's a real maturity signal, isn't it? The market is moving from just number go up to how do I use this thing?
We're watching the transition from pure speculation to actual utility. It's painful in the short term because price discovery is messy, but in the long term, it's the only way this industry survives.
So if we step back and look at the whole board today, the price is down, which feels bad. But miners are pivoting to become AI infrastructure. The New York Stock Exchange is moving to the blockchain. Bermuda is running a national experiment on USDC. The Middle East is issuing regulated digital bonds. And corporations are buying the dip to earn yield.
When you lay it all out like that, a 2% drop in Bitcoin seems pretty irrelevant, doesn't it?
It really does. It's noise versus signal. And today, the signal is screaming, build.
The signal is integration.
Yeah.
Crypto isn't some separate island anymore. It is merging with the real economy.
Before we sign off, I want to leave everyone with a thought that's been nagging me since we talked about the Bermuda and Saudi stories. We talked about how efficient it is to put a national economy or a bond market on chain. Instant settlement, transparency, low fees. It sounds great.
It's the holy grail of finance.
Right, but there's a flip side to all that efficiency. If my bank account becomes a wallet address on a ledger and every single transaction I make is transparent, who's watching? We're seeing a divergence between price and infrastructure today, but I think the real divergence might be between those who own the infrastructure and those who just use it.
That is the ultimate trade-off, isn't it? If you want a friction-free economy, you usually have to pay for it with your privacy.
If your entire financial life is on a chain that the government or a central bank can audit in real time, are you a customer or are you just data?
I think we are going to find out the answer to that question much sooner than we think.
Something to chew on while you check your portfolio. Thanks for joining us for this deep dive into the Great Divergence.
Stay curious.